Welcome to another video. Today, what we will be doing is performing a full multi-time frame technical analysis breakdown. So as usual, we will take a pair, look at what we have on it from a monthly, weekly, and daily perspective to see the directional aspect of the pair. Also check what we have from an order flow perspective, so what the biggest banks and institutions are doing on the pair. And by the end of the video, you will know exactly which is the best zone to be looking for a potential trading opportunity. Now, if you're new to the channel, I'm a top author on the TRADINGVIEW platform, and every day I share a lot of free education and analysis on all my platforms. So I really suggest you subscribe to the channel so you won't miss out on all this free education, and I will see you in the video. The pair that I want to speak about today is Euro USD. And if you're asking yourself why I want to speak specifically about Euro USD, is because first of all, it is very near to providing a very good trading opportunity. And number two, it is very educational at the moment because with the current market situation, I can explain to you guys why and how institutions take their profits. So how do they create distribution phases in which they are obviously taking their profits. In fact, what we can see from the latest report that we have, we can see that the biggest banks and institutions have been closing massive longs. And if you remember, that is exactly what we expected from our previous analysis, which by the way, I will obviously link in description. So we wanted to see the market makers start taking massive profits, and we can see that with the new report, institutions have closed 11K long positions. Now, if you don't know what these tables are, these tables are the commitment of traders. So what the biggest banks and institutions are doing in the market and how they are positioned. Obviously, they're forced to report their positioning. And if you're able to read these tables, you can definitely gain an edge over your competition in the market because you will be trading alongside the banks. Now, let's make a full analysis on Euro USD, see where the opportunity is, and obviously I will keep the analysis very educational so that you will learn exactly what you have to be looking for when you are analyzing the market. Now, let's start from the monthly time frame. Now, on the monthly, clearly, we had a market that has created a nice impulse to the downside. From here, the market clearly created a nice move to the upside. Then the market went again to test this previous support, which is then again towards support at this area, and the market rejected this zone quite aggressively to the upside, creating all this impulse to the upside. So the market just created a huge rejection to the upside, so we are in a very bullish market at the moment. And after an impulse, what do you expect? After an impulse in the market, you always expect the market to give you a retracement. And if you want informations on that possible retracement, where are you supposed to be placing your Fibonacci? You're supposed to be placing your Fibonacci from the low to the high of the impulse. And by doing this on the monthly, we can see that we have a first downside target at a 0.382 of the Fibonacci taken on this monthly impulse. Perfect. We know what we have now from a monthly perspective. Let's go down on the weekly and see what we have. Now on the weekly time frame, what we can see is that the market has created this huge impulse, correction, and huge continuation to the upside. Now, if you remember in our previous analysis, we first said that from here, we definitely wanted to see a retracement to this level. And then again, from here, we explained all the reasons for which we wanted to see this huge move to the upside. And I will link also these two previous analysis in description, the one in which we said that from here, we wanted to see the retracement, and then the one that from here, we explained all the reasons for which we wanted to see this continuation to the upside. I will link these two previous analysis in description, so you can go and check them out for further reference and more free education. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to analyze or cover in the next videos. And the main reason for which we wanted to see this huge move to the upside is that if we go and see what we were having from a COT perspective, is that institutions were shifting completely their positioning. In fact, we were going from having minus 114K net positions, so way more shorts than longs on Euro USD from an institutional perspective, with 271K shorts and 157K longs, to a situation where we're having way more longs than shorts. In fact, we also reached the extreme 2011K net positions, with 262k longs and 50k shorts. Specifically the shorts, they were extremely decreased from 271k to 50k. So definitely institutions were buying aggressively Euro USD. So we definitely expected also the continuation to the upside. And now what is the situation? Now, if we go down on the daily time frame, but actually before we go down the daily, one thing that I want to show you, this was our target on the monthly, right? The 0.382 of the Fibonacci taken on the monthly. Now, if we want informations on the first target to the downside from a daily perspective, where are we supposed to be placing our Fibonacci? From this low to this high. And we can see that on the daily, our first target to the downside is here. The 0.382 on the daily is here, which is on the weekly is here, which is the level at which we want to see the market go. So this is our weekly target, our first weekly target to the downside, the 0.382 of the Fibonacci taken on this weekly impulse. And this is the 0.382 of the Fibonacci taken on the monthly impulse. Just for keeping charts clean, let's only take our first target to the downside. Going down on the daily, what we can see. Now on the daily time frame, situation is quite clear. We have our downside target, and we can also notice one thing. After this huge impulse to the upside, the market has started this corrective period. Specifically, the market is currently creating a rising wedge in a market that is clearly overextended to the upside. Now this is an exhaustion pattern. If you see a market create something like this, any kind of rising channels in a market that has just created a huge impulse to the upside, this means that institutions are taking their profits. Okay, the market makers love to create this kind of patterns to actually take profits. Why? Because instead of these patterns, they can create thousands of manipulations, and all these manipulations will bring traders in actually buying. Okay, every time the market will show some strong move to the upside, many people will start buying. That is exactly what institutions need to actually close their longs, so sell, because for every buyer there needs to be a seller, so they can basically start selling to people that are falling into these manipulations. And in fact, in our previous analysis, what did we say? The last analysis that we made on Euro USD, we said we still don't have the new report, so we still don't know if institutions have actually started closing their longs, but we definitely do expect to see a negative reading here when the new report will come out. And in fact, that is exactly what we have seen. Now that we have the new report, we can see that there are 11k longs getting closed. So institutions are closing a lot of longs inside of this region, creating a usual exhaustion pattern. Now, at the moment, can we be looking for the short? Obviously not yet. Why? Because not only we have the support of this trend line inside of this region, we also have a confluence of support of this previous resistance here, which is now turned support in this area. So we have a confluence of support inside of this zone from which we could easily see the market create a move to the upside. And we also don't know if this profit taking is enough. We don't know if they just wanted to close 11k longs. Probably they want to close more. So it might be very possible that we will see some more movement inside of this rising channel. So how we will be approaching this kind of situation with students? Now, obviously, if we will see inside of here the market continue to the upside, as it could easily do considering that the support is still holding, we will obviously not be interested in the short yet because nothing is ready. However, if we will see the market break below this structure, below this confluence of support, then all this support will be turned resistance inside of this area. And after the break on the retest of this structure, this is exactly where with students we will be looking for a potential opportunity. And as usual, monthly, weekly, and daily are the best time frames when it comes to the direction of the market. But the best time frame for entry is the 4 hours. And after the break on the retest of this level inside of this area, this is where with students we will be monitoring price action from a 4-hour perspective, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a good risk to reward and very good probabilities for the move to the downside and for the market to reach our first target to the downside, and then possibly obviously also our second, which we had taken on the monthly time frame, as you remember. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you Also, make sure you go and check out the mentorship program. You find it linked in description. You first learn all the rules of my rule-based strategies in the program, and then you trade them live with me. In fact, every single day you get a new daily market breakdown showing you exactly how to apply the strategies with entry, stops, take profits, as well as having me answering every single question that you have every day, including the weekends. So I really suggest you go and check it out. The link is in the description, and I will see you in.